So before we drill down into Manhattan, I mean, are you nervous at all by this upcoming Fed rate hike?
Not really. Rates have been sitting at such a low level for a long period of time. In certain markets, like in New York City, about 50% of the buyers are cash anyway. So I don't see it as a big effect. If you look
Is that in the luxury segment?
Well, as you move from low to high, the probability of a cash buyer greatly increases.
Right.
So this rate increase is going to be more of an impact to the low and middle end of the market, which we're already seeing some of that impact already nationally.
Okay, but so you don't see this as a significant impact on the housing market?
I don't actually. In many ways, in the sort of mid-range view, I see it as a good thing because when rates are rising, in theory, the economy is improving and there's some sort of soft handoff between being sort of addicted to low rates and wage growth and improved employment.
Right, and then that translates to demand in housing. Okay, but what about what's going on in Manhattan, though? So vacancies are at a 9-year high. Why?
So what we've been seeing in 46 of the last 52 months, we've been seeing rents rise, and they've been skirting or hitting records, not just in Manhattan, but in Brooklyn and in the region.
Right.
Been rising because we have a robust local economy. We have at or near record employment growth. On top of it, tight credit conditions. Credit is still mortgage lending credit. Many other
still tight.
Very tight.
Okay.
And that's tipping would-be first-time buyers into the rental market. That's the reason nationally we're seeing low first-time buyers. It's simply because it's more difficult. It's somewhat I call lending conditions right now. I'm not aspiring to get us back to the housing bubble by any means.
Right.
But lending conditions now are very irrational still.
Okay.
For a number of reasons. The lenders are still under siege, belatedly so, from DOJ, from Department of Justice, fines being paid out. On top of it, the former GSEs are still forcing buybacks for loans that had a typo in 2007. So lenders are really skittish about lending. They're looking for reasons not to lend and growing other lines of business.
So is this a danger sign? I mean, I know we're talking about just one market here, but is this a danger sign here in New York City?
No, I think it's a good thing. In other words, we have, in the last 4 or 5 years, what's developed into basically an affordability crisis, whether you're talking about renting or purchasing housing. And a lot of that has to do with tight credit conditions, keeping sales inventory off the market, NAR's existing home sale data.
And that means prices are just going
you
up
constrain,
and up and up.
And so it's a smaller subset of people that are active in the market.
Right.
So,
and they're just bidding each other up.
They're bidding each other up.
Right?
And the same thing with rents. Cities can't grow if they create jobs and then incoming future employees can't find a place that they can live. Yeah. So what we've been seeing is all this rapid rent growth, but at the same time, in the last 3 or 4 months, we're really starting to see vacancy tick up, and we're also seeing landlord concessions, that landlords, in order to protect the rent level, sort of like the rack rate at a hotel, they're paying brokerage commissions on an increasing basis. They're offering free rent. It's not that rents are going to fall anytime soon. It's that the pace of growth is expected to ease a bit because the consumers have nowhere else to go.
There's nowhere to go, so they need to make it more affordable.
We're hitting this point where affordability is becoming, it's been a problem, but now it's extreme.
But bottom line, you don't see that affecting property prices, though.
No, well, in many ways, the markets compete with each other.
Okay.
And so on the purchase side, there's a disparity between the luxury market and everybody else. The luxury market, plenty of supply. Everybody else, chronically low inventory, rising prices. Not a great thing.